Hello traders, welcome back to another video. If it's your first time watching this channel, my name is MALONZA FX. Of course, I'm a full-time trader. And if you are a returning subscriber, thanks so much for the support. Of course, I'll keep doing daily content on global markets. Now, each and every single day, we usually conduct live market analysis on our Zoom channel, and I'll leave the link on video description so you can join Telegram, where I usually share the Zoom link each and every single day. Out of the analysis we did today, I managed to take a USD sell, and we made a kill, all right, my team and I. So I have a trading community. If you like to join my trading community, again, join my Telegram. I usually share all my details in my Telegram community. Let's go right into the live market analysis.
If we look at the state of the dollar, if we look at the dollar index has generally been softening. That is, the dollar index has been declining, dipping to its lowest in since January. Since January, this is the lowest price that the dollar index has been trading since January. And the reason for that is because the market is waiting for further guidance from the US Central Bank on expectations of a potential interest rate cut come September. And this is due to risks in the labor market. So employment numbers, unemployment is ticking higher. The numbers that are coming in showing that unemployment has been ticking higher. This is causing concern for the central bankers, and therefore the market is anticipating the central bankers to cut interest rates come September. Currently, we are trading below 101.94, which was a critical level of support. Price action went through that level, bounced off it, but broke lower. So the next, of course, point to look at to anticipate a further sell-off in the dollar index, maybe we might see a drop to below 101.60. So anticipating a drop below that level, if market sentiment will continue being bullish. At the moment where we are at the dollar, when you look at the stochastics, we have basically hit the overbought region on the stochastic oscillator, providing a good area to consider shorting it if in case we don't see the dollar index reversing. When more positive data comes from the United States, we might see the dollar index reversing and heading higher. So there are several scenarios to focus on here. Okay, the scenarios that one can pay attention here is to anticipate probably another wave of selling and then a slight pullback, and then the dollar continuing to move even lower. Or alternatively, we might have price breaking above 101.94 thanks to any positive economic data that might come out, which might indicate that the central bank might possibly delay cutting interest rates come September. So we might see the dollar also jumping above 101.94 and initiating another bullish market structure. Or if the uncertainty continues to prevail, we might see the dollar index ranging between 101.94 and 101.60, just consolidating around that area. That's also another possible scenario for the dollar index. So that consolidation, a breakout above, a breakout below, depending on how the data will come in. If the data comes in positive and triggers a demand for the dollar, we should see it breaking out of that range. And since that is how the dollar might potentially trade, of course, another asset that is closely related to the dollar is gold. So when you look at gold, how has gold been trading? Gold basically has remained above all-time highs at 2,500. It has been consolidating in that region, as you guys can see. That's how gold has been trading so far, consolidating between let's see, let's look at the price between 24.85 and 2,500, just consolidating but remaining at an all-time highs. This is supported by the safe haven demand for this asset. Remember, there are tensions in the Middle East, and these tensions that are there in the Middle East, especially the Israeli and Hamas tensions that are there, despite the US Secretary of State visiting the Middle East yesterday and agreeing with the Israelis, agreeing to a ceasefire deal. Hamas is yet to accept the ceasefire deal. And on top of that, Hamas have claimed responsibility for a bombing that happened in Tel Aviv. That was over the weekend. So gold has been trading in an uncertain range, but overall bullish. Remember also, gold prices are supported by a weak dollar. This is because the market is anticipating a dovish Federal Reserve Bank interest rate decision, monetary policy decision. A dovish central bank is a central bank that is looking to cut interest rates. And given those mix of factors, this has made the gold trade in this consolidation that you're currently looking at. In case anything changes, if tensions in the Middle East continue to cool down, okay, we should see gold prices moving lower, maybe trading within that range at the lower side of the range. This is the low of the range. Or if anything else, if the market continues pricing in that the likelihood of the Fed to cut interest rates will be high, since maybe negative economic data will be reported. If there is negative economic data to do with the United States coming out, this might cause another move up, another leg up in gold. We might probably see gold breaking above this consolidation, that is moving above the 1500, the 2500 handle, moving above, a very nice breakout, giving us opportunities to go long, possibly retracing, slightly consolidating, and then moving back up again. So that can be a play in gold. And remember, gold is supported again by its safe haven appeal, okay, given the geopolitical tensions that are in Ukraine, Russia, and also in the Middle East, and the fact that the United States Central Bank is looking to cut interest rates. That is at least what the market is anticipating. So we'll see that, and if anything else changes, maybe data coming from the US coming in negative, supporting the dollar, we should see gold basically moving towards the low of this consolidation, or the low of this range that we are in. We should see gold dropping below it. So very interesting to watch gold, especially when we have this consolidation. Will there be any catalyst that will cause gold to break to the upside, move lower to the downside of the range? And even if there is more positive sentiment and and if geopolitical tensions cool down, we might see gold even breaking further lower. Okay, remember, if positive economic data continues to come out of the United States, this will make the central bank delay in cutting interest rates. Will make the market believe that the central bank will delay in cutting interest rates, and this will basically drive gold prices lower, all other factors, that is geopolitical tensions, remaining constant. So that's another asset to pay close attention to. It will be very interesting to see how it trades. Another asset that I like also looking into is crude oil. Okay, crude oil. Remember, yesterday I talked about crude oil prices. We mentioned that crude oil has indeed been declining. As you can see on this 1 hour time frame chart, crude oil has been declining. But crude oil has been declining, but there are suspicions that crude oil prices might continue being supported if the tensions in the Middle East continue. But crude oil prices have declined because one of the reasons is yesterday, the US Foreign Secretary of State, yesterday, Antony Blinken, when he visited Israel, they were hopeful that a ceasefire can be reached. And since that contributed to easing geopolitical tensions, we saw crude oil prices declining further, currently trading at the 73.15 handle. But if these tensions come up again, are revived up again, depending on how Israel will react to the bombing that happened in Tel Aviv since Hamas took responsibility, this can be supportive of crude oil prices. But also, as of now, factors that contribute to the bearishness in crude oil prices seems to be piling up. Another major factor is the latest economic reports or macroeconomic reports coming out of China indicate that the economy there is slowing down. And remember, China is one of the countries that consumes a lot of crude oil globally. So if demand in China is declining, that will contribute towards negative crude oil prices. Okay, so given that is the backdrop for crude oil, so looking at crude oil, if we're going to continue seeing this sell-off, of course, we should anticipate that any move to the upside might potentially be limited. So it will be interesting to see if crude will be driven all the way to $74.34 a barrel or $74.71 a barrel. So waiting to see whether we'll have that pullback in crude oil prices today or not. I can still see guys are joining the room. So if you're joining the room right now, we are talking about the oil market, crude oil prices, to see how crude oil prices will potentially trade today. So look for near-term resistance at 74.34, near-term resistance at 74.71, and also maybe potentially crude oil prices breaking below 72.73. That is consolidating around here and potentially breaking below. So that kind of move, okay, if crude oil prices will continue weakening, it will be interesting to see that. Also waiting to see whether stochastics will bounce back up, trade around the 80 level, okay, that 80 region, $80 per barrel, not 80, sorry, at that overbought level on the RSI at 80. Okay, see whether the stochastics will bounce all the way up to there, basically indicating that price has been overbought, okay, given that negative economic background reasons that we have for crude oil prices continuing to decline further. So let's see, we have also the 15-minute. I want to look at it from a very lower time frame. Okay, from a very lower time frame. So it's either prices are driven all the way, let's use the 30-minute time frame. Either prices are driven all the way towards 74.29. Watch how the RSI, the stochastics react at those levels, 50, 38.2. At those levels, you get at least a low risk entry, okay? At least a low risk entry. That's essentially what you are looking for as a trader, either hit there or up here at the 50 level, and then prices potentially declining. So that's something to watch out for when it comes to crude oil. The other thing, of course, is the rally in the United States stock market and major indices. If you are trading indices like the S&P 500, the S&P 500, yes, the US 30, the US 100, we saw a rally. These major indices extended their winning streak, and of course, they are being driven by hopes that the central bank will reduce borrowing costs come September. The stock market responds positively when the central bank is thinking of cutting the cost of borrowing. That is, companies love cheap money, of course, cheap debt. So if there are signs that the cost of debt is going to be reduced come September, that is supportive of the stock market, and that's usually negative for the dollar, of course. So sometimes all other factors holding constant, if the dollar is selling off, we tend to see a very strong move up on indices. Remember yesterday we were talking about how the S&P 500 is anticipated to rally. This is the kind of setup we had yesterday, and price came to the 50% level, as you can see. So at that 50% level, 38.2%, and bounced off those levels. That was at around 11. Found support there, bounced off that support, and now it has moved up more than, I think, more than 50 points up. Okay, so today we're looking at a similar scenario. We're looking at a similar scenario. If this risk-on market sentiment continues to prevail, we should anticipate to see maybe a good pullback. Let me just indicate this. Potentially a good pullback towards the 50%, 38% region. That is scenario number one. So scenario number one is a very good pullback towards those regions, and then potentially bouncing off and rallying higher. Or the other alternative, if we don't see prices selling off like that all the way to those regions, of course, anticipate a break above this key level here. That is the 0.0 fib level. Anticipate a break above around 56.36 thereabouts. Anticipate prices to break above, potentially consolidate or retrace for another opportunity to have another leg up, okay, to have another move up. Anticipate that. But if price action sells off all the way towards 61.8 and manages to break below 61.8, that means that, you know, the narrative has changed. The economic narrative has changed, and the narrative has become bearish for the stock market. So all these moves are data dependent. It's important to always monitor what is happening in the markets, to monitor closely as you look at your technical analysis to make sure that your technical analysis is in line with market information. Okay, another asset that we are going to look at is the Australian dollar versus the United States dollar. This morning, the Reserve Bank of Australia decided to hold interest rates, to put interest rates at hold, not to hike interest rates. That was the main headlines for this morning. So that's the main headlines for this morning, Australian dollar. So let's see, how is the Australian dollar trading? How is the Australian dollar trading? The Aussie dollar versus the United States dollar, to see how it is trading. So it's trading, rallied just like it did yesterday. Rallied yesterday. So this morning we see the AUD USD jumped slightly up, came back down in the morning, sold off slightly, but currently the asset is on the rise. Currently the asset is on the rise. So let's see, if we were to attack this, what will be the best way to go after it? So I have this swing low here up to all the way to this swing high here. We see that this morning came at that level, that is at 8. We came at 38.2%. We have now bounced off that 38.2% level, that is at around 67.14. And currently we are trading at 67.27. So if this bullish sentiment continues, we should see a break, as the structure continue breaking higher, price action continuing to move higher. That is moving above that region here, the 0.0% region, moving up, probably retracing a little bit, potentially retracing, or it can just jump up, okay, and then swinging back up again. So that's the scenario that we might see here with the AUD USD, or price action can pull back again and move back again all the way to the 61% level if the dollar continues being weak. Because right now I can look at the stochastic. I see we are in the overbought regions. So anticipating a pullback down, it won't be unreasonable, but watch out for those support levels at 61.8% level, that being the final line in the sand. And if that is not going to happen, watch for a break above that 0.0 level. Okay, watch for a break above that level. If price action breaks below the 61.8% level, that means that the fundamentals have changed. Something fundamentally must have changed. Maybe the dollar has become excessively strong, or there is negative news coming out of Australia. So those are the scenarios for this asset. It's either we trade around that 61% level, maybe chop around there if nothing significant to do with the dollar, that is in terms of economic data, is released today. So that's how the dollar has been, that's how the AUD USD has been trading. The other asset to look out for, currency, which has been very quite active, is the euro versus the United States dollar. If you look at the euro USD, let's look at the euro versus the USD. That's the euro versus the USD here. So if we look at how the euro has been trading relative to the dollar, the euro yesterday, we looked at a euro USD setup yesterday, and this was the setup that we were looking at yesterday when we were talking about the euro USD. We're looking at the fact that the euro USD has been in a bullish market structure, that is, it has been trending higher. The reason for that is a weak dollar, and also inflation in Europe seems not to have really cooled down. Inflation went up above the European Central Bank's target. The European Central Bank target is to make sure inflation is at 2%, but inflation data, last month's inflation data showed that inflation had ticked up 2.6% above that target. So the European Central Bank is not looking to cut interest rates anytime soon, but the overall picture is that Europe, that the ECB will cut interest rates, but not anytime soon. Okay, not anytime soon. And this has been very bullish for the euro. That's why the euro dollar has been moving up. So this was yesterday's setup. We're looking at price action basically coming in, retracing all the way to the 61.8% level. Let me just highlight this using the stochastics tool. So you can see stochastics came all the way to over at 10:30. We tried to take a hit at it at 10:30, but prices drifted further lower. Now let me look at the 30-minute time frame. That will give us a good picture. So that's the picture yesterday. Essentially, we had price rallying up, then pulling back down. So this was the rally move up, then pulled back towards support 50.61. That was the setup. Stochastics was at oversold, gave us a good entry opportunity, and the pair jumped up more than more than 40 pips. Okay, today we can see how we are trading today. We still have that bullishness in the market. The euro has approached, it's about to approach, it's near 111 flat. Okay, because the risk-on sentiment has been lifting the pair, supported by broad market buying, and of course by a weak United States dollar. It's a weak US dollar. So let's see whether we can have this rally continuing on today. So couple of scenarios, as usual, couple of scenarios. We had this rally beginning yesterday at this low here. So these are the couple of scenarios that one ought to anticipate. We might see if risk-on sentiment continues being positive, that is, the markets are moving up and the dollar is weak, we might see price action coming and finding support at 110.59 thereabouts, or 110.53 thereabouts. If that is not the case, we should see a break above this level here, that is at around 110.87. Okay, so similar here, see a breakout above and prices moving above that moving above that 0.0 area or level here, maybe price consolidating slightly and then moving above it and then retracing. So we either anticipate a break above that point there, or price action retracing all the way to 32.50% level in order to bounce back up. Alternatively, the other scenario is if economic data coming out proves to be positive for the United States dollar, we should see the euro selling off and breaking below 61.8% level. That is breaking below 110.51. 110.51. So any break below that level should introduce aggressive selling in the market. That is a break below 61% level here. Maybe price can come all the way from where we are, break below that level. That should introduce some new selling in the market. For the euro dollar. So we are just waiting to see how the demand is. At the moment, we see the euro dollar, when you look at the stochastics oscillator on the 30-minute time frame, we are trading at overbought, the overbought region. That's where we are at the moment. So today's events to watch out for: Germany's producer prices. That is today's event to watch out for. Germany's producer prices. Germany's producer prices. Someone told me my audio is not clear. I think I didn't keep the mic very close to me. So Germany's producer prices. Watch out for that today. There'll be speeches by several officials of the Federal Reserve Bank, and this will obviously have an impact on the United States dollar. So let's see how the dollar will trade today. As I look at the dollar index as of now, I can see the dollar index is reading at overbought. Overbought when you look at the 1 hour time frame, and also sliding away from the overbought region on the 30-minute time frame. Going by the 1 hour time frame, we're currently at that overbought region. See whether this asset will continue declining lower. Let's just look at it from a short time frame, like the 30-minute time frame. So we had this move down. So I'm gonna take this move here. So this move here up to here. Currently, we have hit the 50% region at 101.83. We already hit that ceiling right there. We are trading below that. We're trading at 38.2. So I'll wait to see whether we'll break below 101.60, as I had said earlier, or currently break below 23.6 region in order for this sell-off to continue, or whether we'll see a rally all the way to 101.994. Okay, so that's the market talk for today. At the moment, we are about to start the physical class or physical training, starting from beginner all the way to advanced, essentially how to effectively use these trading tools and formulate a trading strategy based on sound market analysis. So see you guys. Have a very wonderful trading day. Manage your risk wisely, follow your plan, follow your strategy, and let's meet again for this. Let's meet again for this tomorrow. So good luck and all the best. Again, for those ones who are joining us for the last time, my name is Dennis MWENGA. Make sure you join us for these sessions. And of course, if you are interested in trading classes in order to learn how to trade, how to use our trading platforms, please make sure that you contact us or contact MALONZA. Better yet, contact MALONZA for more information on that. So good. Have a very wonderful day. A very profitable, wonderful day. Goodbye, everyone.